When you hear Swiss bank account, you probably picture billionaires, secret vaults, and James Bond villains. But here's the truth, regular people can open them too. And it's not what Hollywood makes it seem. In this video, we're breaking down the myths versus reality of Swiss banking, who can open an account, why you might want one, and the surprising rules you have to follow. Before we start, hit like, subscribe, and tap the bell, because the real story is far more interesting than the fiction. 10. The Hollywood myth versus Swiss reality. Swiss bank accounts have been wrapped in mystery thanks to decades of Hollywood influence. In the movies, they're portrayed as hidden vaults for criminals, spies, and billionaires looking to hide shady money. But the truth today is far from those cinematic depictions. Modern Swiss banking is a highly regulated and transparent industry. Since 2018, Switzerland has actively participated in global financial cooperation by automatically sharing account information with tax authorities in over 100 countries. These changes have reshaped Swiss banks into reputable, law-abiding institutions. 9. Who can actually open a Swiss bank account? Many people assume that Swiss bank accounts are only available to the ultra-wealthy or celebrities, but that's not true. In reality, most adults with proper documentation can open one, regardless of their status or fame. To get started, you need to be at least 18 years old and have a valid passport, proof of address, and documentation showing the legal source of your funds. However, the process isn't as casual as opening an everyday account in your home country. Swiss banks conduct thorough background checks, run names through international watch lists, and require detailed information about how the money was earned. 8. The legal side. Tax rules and reporting requirements. Owning a Swiss bank account is legal for most people, but it comes with responsibilities, especially regarding taxes. You can't simply open a Swiss account and assume your financial activity is private. International agreements now make it difficult to hide assets abroad. If you're a U.S. citizen, for example, and your total foreign account balances exceed $10,000 at any time during the year, you're legally required to report them using FBAR. You'll also need to disclose the income from these accounts when filing your tax return. Other countries have their own strict regulations, and in many cases, Swiss banks will automatically report account activity to your home country's tax authority. 7. The real advantages of Swiss banking. Even with all the legal and regulatory changes, Swiss banks continue to offer several appealing benefits that attract global clients. Switzerland is known for its political neutrality, strong economy, and conservative banking culture, which makes it a haven for those looking to preserve wealth in uncertain times. The Swiss franc has traditionally been considered one of the most stable currencies in the world. This stability makes Swiss banks attractive to investors who want to hedge against inflation, currency devaluation, or political instability in their home country. 6. The disadvantages and hidden costs. Swiss banking certainly has its perks, but it also comes with a number of downsides, especially for regular people. First and foremost, it's expensive. Most accounts require ongoing maintenance fees, which can range from a few hundred to several thousand Swiss francs per year. On top of that, there are transaction charges, international wire fees, and currency exchange costs. Managing your account may not be convenient either. While online banking is available, some tasks might require you to call during Swiss business hours or even make an in-person visit. Language and time zone differences can create added friction, especially if you're not based in Europe. 5. Common misconceptions debunked. There are still plenty of myths floating around about Swiss bank accounts, and it's time to set the record straight. One of the biggest misconceptions is that Swiss accounts are still hidden from tax authorities. That hasn't been true for years. With automatic information sharing agreements in place, your home government likely knows you have a Swiss account, especially if you're from a country like the US, UK, or Germany. Another false belief is that Swiss banks accept money from anyone, no questions asked. In fact, they have some of the world's most rigorous anti-money laundering standards. If you can't prove the legal origin of your funds, your account simply won't be opened. 4. Alternatives to Swiss banking. While Swiss accounts have their appeal, they're not always the most practical choice. Depending on your needs, you might be better served by looking elsewhere. Countries like Singapore, Luxembourg, and Hong Kong offer similarly strong banking services, often with lower entry barriers and costs. In the United States, many domestic private banking services offer the same level of wealth management as Swiss banks, without the complexity of international paperwork and regulations. You may find the services more accessible and easier to manage when everything is local. Digital banks and fintech platforms have also entered the global scene. Many now offer multi-currency accounts, global transfers, and investment tools that used to require offshore banking. For everyday international needs, these solutions are often faster, cheaper, and more flexible than traditional Swiss accounts. 3. Who should consider a Swiss account? Swiss banking isn't for everyone. For most people, the hassle and expense outweigh the benefits. However, there are a few scenarios where having a Swiss bank account makes sense. If you have significant international assets that require sophisticated management, Swiss banks can offer valuable tools. You might also benefit from Swiss banking if you conduct frequent business in Europe or plan to relocate to Switzerland. Some clients open accounts to diversify geographically, protect assets, or preserve wealth in a historically strong currency. In short, if your financial situation is complex and international in nature, and you're prepared to meet all legal and financial obligations, a Swiss account might be a worthwhile tool in your financial strategy. 2. What to know before you open one. Before starting the application process, it's important to prepare. Make sure you understand the paperwork involved, from proof of income to tax declarations. Speak with a tax advisor or financial planner who understands cross-border regulations. You'll also want to compare banks. Some offer more flexible terms and lower fees than others, especially if you're not seeking premium wealth management services. Don't underestimate the time and patience required. It may take several weeks just to open the account and longer to fully activate services. Everything must be verified, translated if necessary, and approved by compliance teams. 1. Making the final decision. Opening a Swiss bank account is no longer about secrecy. It's about strategy. While the allure of Swiss banking still exists, especially due to its stability and global reputation, it's only a smart move if your situation truly justifies it. If you have specific goals like protecting wealth during economic uncertainty, accessing advanced investment services, or managing international financial interests, then Swiss banking can offer value. But if you're looking for privacy, simplicity, or high returns without effort, you may be disappointed. Swiss bank accounts aren't just for the ultra-rich, but they also aren't the secret tax loophole people imagine. Would you ever consider opening one? Drop your answer in the comments. I'm curious to see how many people change their mind after this video. If this cleared up some myths for you, like, subscribe, and share it with someone who still thinks they're only for billionaires. Until next time, stay informed, stay strategic, and keep your money working for you.